Hey everyone, welcome back. You know how it seems like everyone's always talking about the same big name stocks?
Yeah, for sure.
Well, today,
hmm
we're doing things a little differently.
Okay.
We're diving into some companies that might be under the radar for some folks, but could offer a really nice little bonus,
Interesting.
especially if you're all about those dividends.
I like where this is going.
So picture this.
Mm.
You're looking for stable investment options. All right. But you want something a bit more exciting than just your typical index funds.
Yeah, that makes sense.
And maybe you're looking for something that pays out some of those sweet, sweet dividends.
Okay, I'm with you.
So that's where these three companies come in. Kraft Heinz, Kenvue, and Middlesex Water.
Interesting choices.
Now, these three all had a bit of a rough time in 2024.
Oh, really?
Their stock prices took a dip. But here's the thing.
Okay.
Combined, they're offering an average dividend yield of 4%.
4%. It's definitely something to pay attention to.
Right. It's pretty eye-catching.
Yeah. But we gotta look deeper than that.
For sure.
It's not all about the flashy numbers.
Absolutely. So let's break it down starting with Kraft Heinz.
Okay, a household name for sure.
Exactly. Everyone knows Kraft Heinz, mac and cheese, ketchup, all that good stuff.
Right.
But their stock price really tumbled in 2024. I mean, it almost hit a 4-year low.
Wow. That's a pretty steep drop.
Yeah. And it makes me a little hesitant.
Yeah, I get that.
I mean, a big drop like that could be a sign of trouble.
It definitely could be.
But on the other hand, maybe it's a chance to get in on a bargain?
That's the classic investor's dilemma, isn't it? High risk, high reward.
Right. So how do we make sense of that with Kraft Heinz?
Well, right now they're offering a 5.5% dividend yield, which is pretty attractive.
Yeah, 5.5% is nothing to sneeze at.
Definitely not.
Yeah.
But their recent performance is kind of a mixed bag.
In what way?
Well, their profit margins have stayed pretty consistent, which is good.
Okay, that's a plus.
But they're also dealing with declining revenue, and that's something to keep an eye on.
Yeah, declining revenue, that's never a good sign.
Not usually.
And something else that kind of throws up a red flag for me is that they actually cut their dividend back in 2019.
Right.
So why should I trust that they won't just do it again?
That's a valid concern. You know, that 2019 dividend cut was a pretty big deal. It shows that they're not afraid to make tough decisions. They're willing to prioritize their financial stability, even if it means disappointing some investors.
They're playing the long game.
Exactly. And they've held the dividends steady since then, which suggests that they're really focused on maintaining the business.
I see.
It's not about aggressive growth right now.
More like slow and steady.
Exactly. And in their Q3 2024 earnings report, they actually projected that their organic net sales.
Organic net sales.
Yeah, that's sales from their existing products and operations, not counting any acquisitions or divestitures.
Got it.
They projected that those would be down 2% to flat for the year.
So basically they're saying don't expect much growth from us.
Pretty much. Yeah. But here's another interesting piece of the puzzle.
Okay, lay it on me.
Their price-to-earnings ratio is super low, like 9.6.
Okay, but what does that actually mean? Explain it like I'm 5.
Think of it this way. It could be a sign that the market is undervaluing Kraft Heinz.
Interesting.
So it might be a good opportunity for value investors.
So are you saying that it might be a good time to buy Kraft Heinz stock?
It's possible, but there are always two sides to every coin, right?
There's always a catch.
Exactly. That low PE ratio could also mean that investors are worried about their future profitability.
Ah, so it's a gamble.
You got it. You've got a well-known brand, a decent dividend yield, but that lack of growth is a big question mark.
So it comes down to whether you believe Kraft Heinz can turn things around.
Exactly.
Yeah.
Would you bet on them, or are you looking for a company with a more clear path to growth?
Okay, that's a lot to think about.
Yeah.
Let's switch gears for a minute and talk about a company that's a bit newer to the scene. Kenvue.
Oh, yeah, the one that spun off from Johnson & Johnson?
Right. They're kind of the new kid on the block in the stock market.
Yeah, they haven't been on their own for very long.
And it hasn't been the smoothest start.
Oh, really?
They're actually trading at a discount compared to other companies in their industry.
That's interesting. Why do you think that is?
Well, for starters, they're facing some headwinds with their skin health and beauty segment.
Oh, like Neutrogena and Aveeno?
Exactly.
Yeah.
Those brands are facing some tough competition, and it looks like consumer tastes are changing.
Yeah, the beauty industry is always evolving.
It really is. And those changes are hitting Kenvue's sales. We're talking a 3.2% year-over-year decline in the first 3 quarters of 2024.
Ouch. That's got to be making investors nervous.
Definitely. So is Kenvue already in trouble, or is this just a bump in the road? I mean, they're a new company, so maybe some hiccups are to be expected, right?
Yeah, it's true that new companies often face some growing pains. But here's the interesting thing.
Oh.
While their skin health and beauty segment is struggling, their other segments are actually doing pretty well.
Which segments are those?
Self-care and essential health.
Oh, right. So we're talking Tylenol, Listerine, Band-Aid? Those kinds of products.
Exactly. And those brands are seeing some pretty positive sales figures.
So it's not all doom and gloom.
Not at all. It's just that one segment that's really dragging them down.
But does the size of that segment even matter in the grand scheme of things?
It definitely does. You see, the size of a segment relative to the whole business can really impact how investors view the company.
So even though their skin health segment is struggling, it's not necessarily a deal breaker for the entire company.
Right, because it's just one piece of the puzzle.
Got it. So are investors just waiting to see if Kenvue can turn that segment around?
I think that's a big part of it. They want to see if Kenvue can adapt and overcome this challenge.
So Kenvue's got some strengths, but that skin health situation is definitely something to watch.
Agreed. It'll be interesting to see how they handle it.
For sure. So what are we thinking overall about Kenvue as a potential investment? What are the pros and cons?
Well, on the plus side, they're currently trading at 17 times forward earnings estimates, which is a pretty reasonable valuation.
Okay, so not too pricey.
Right. And they're also offering a dividend yield of nearly 4%, which is pretty tempting for income investors.
Yeah, 4% is pretty solid.
It is. So when you combine those factors, it makes them potentially attractive as a value stock.
Especially if you believe in their long-term prospects.
Exactly.
So maybe this is one of those buy low, sell high opportunities.
It could be. If they can fix that skin health segment, their stock price could really jump.
That's a big if, though.
Definitely. It all comes down to whether you believe in Kenvue's ability to turn things around.
Okay, enough about those youngsters. Let's move on to our final company for today, Middlesex Water.
Now we're talking about a completely different kind of company.
Right, this one's a utility company.
Which usually screams stability.
Exactly. But here's the thing, Middlesex Water stock took a pretty big hit in 2024.
It did. How big are we talking?
It ended the year down almost 20%.
Wow, that's a pretty significant drop for a utility company.
It is. It makes you wonder what happened.
It does. I mean, utility stocks are usually pretty steady.
Exactly. So
Yeah.
what gives?
Well, don't let that dip scare you off.
Okay.
It's not all that unusual for Middlesex Water. They've been around since 1897.
1897. Wow, they've seen it all.
They really have, over a century of weathering market storms. And you know what else?
Tell me more.
They've increased their dividend for 52 consecutive years.
52 years. That's longer than I've been alive.
It's an incredible track record. It means they're a dividend king.
Dividend King.
Yeah, it's a title given to companies that have consistently increased their dividends for at least 50 years.
Okay, that's impressive.
Yeah,
So they're clearly committed to rewarding their investors.
absolutely. They've got a long history of sharing their profits.
But what about that big drop in December 2024? Was there some bad news that caused it?
That's the interesting part. There wasn't any specific negative news that triggered the sell-off.
So what happened?
Sometimes the market just acts irrationally. You know how it is.
It definitely has a mind of its own.
It does.
Huh.
But if we look past the market's drama and focus on Middlesex Water's fundamentals,
Okay.
they actually reported strong Q3 2024 results.
So they're doing well despite the stock price dip.
Exactly. Their diluted earnings per share, which is a key measure of profitability, increased by 43% year over year.
Wow, 43%. That's a pretty healthy sign.
It is. It shows that their business is still strong.
So what makes Middlesex Water unique? What sets them apart from other utility companies?
Well, here's a key point. 92% of their revenue and 93% of their net income comes from regulated markets.
Regulated markets. Can you explain that?
Sure. In regulated markets, prices are set by government agencies.
I see.
So that means Middlesex Water has a much clearer picture of their future cash flow.
Because they know how much they can charge.
Exactly. They can predict their income and expenses much more accurately, which makes it easier to plan for things like dividend payments.
So it's like a built-in safety net.
You could say that it provides a level of predictability that many other companies don't have.
Okay, that makes sense. So they might not be the flashiest company, but they offer that peace of mind.
Right. It's more about slow and steady growth.
You mentioned earlier that they're trading at a discount.
I did. Right now, they're valued at about 13.4 times their operating cash flow,
Okay.
but their 5-year average cash flow multiple is 25.1.
Wow, that's a big difference.
It is. It suggests that they might be undervalued by the market.
So for those who are all about value investing and seeking those consistent dividends, could this be a good time to buy Middlesex Water?
It's definitely worth considering. They're a stable company with a long history of dividend payments and a track record of weathering market ups and downs. Plus, they're currently trading at a pretty attractive valuation.
Okay, so far so good. But let's be real. The water industry isn't exactly known for its rapid growth.
That's true. It's not a high-flying tech sector.
So how does Middlesex Water appeal to someone who's looking for growth in their portfolio?
Well, you're not going to see explosive growth from a water utility like you might from a tech startup.
Right.
But remember, slow and steady wins the race, too. Middlesex Water is constantly investing in its infrastructure, expanding its service areas, making strategic acquisitions.
So it's more about that dependable long-term stability and dividend income rather than chasing quick gains.
Exactly. It's a different approach, for sure.
For sure. But you know what I just realized?
What's that?
Everyone needs water.
You got that right.
It's an essential service.
Yeah.
It's not like people are suddenly going to stop drinking water.
Nope. That's a pretty stable market.
So Middlesex Water is pretty much recession-proof. People still need to drink water shower and, flush their toilets.
Exactly, even when the economy takes a downturn.
So we've got these three companies, each one offering a decent dividend yield, but each with its own unique set of pros and cons.
It's true. They're all very different.
We've got Kraft Heinz with its big-name brands and high dividend, but struggling with growth. Kenvue with its potential for a turnaround, but also facing a lot of uncertainty.
Right.
And then Middlesex Water with its rock-solid stability and consistent dividends, but maybe not offering that exciting growth potential.
It's a tough choice.
It is. So if you had to pick just one of these stocks for your own portfolio, which one would you choose?
Ooh, that's the million-dollar question, isn't it?
It is. And it's a question we're going to put to our listeners, too.
Sounds good. I'm curious to hear what they think.
Me too. But before we ask them to make that tough decision, let's take a quick break.
Okay.
We'll be right back to finish up our deep dive into these three dividend-paying stocks.
Sounds good. So before the break, we were talking about Middlesex and their impressive stability and that incredible 52-year dividend streak.
It's true. But let's be honest, water utilities aren't exactly known for being the most exciting or fast-growing sector.
You're right. They're not exactly setting the world on fire.
So how does a company like Middlesex appeal to someone who's looking for some serious growth in their portfolio?
Well, you're probably not going to see the same kind of explosive growth from a water utility like you might with a hot new tech startup or something.
A different kind of investment.
Exactly.
Yeah.
But slow and steady wins the race too, right?
That's true. Slow and steady can be good.
And Middlesex is constantly investing in its infrastructure, expanding its service area, making strategic acquisitions.
So it's more about that dependable long-term stability and dividend income rather than trying to hit it big with quick gains.
Exactly. And don't forget the most important factor, everyone needs water.
Yeah, that's a good point. People aren't going to stop needing water anytime soon.
Nope. It's an essential service. Makes Middlesex Water pretty recession-proof.
Right. People still need to drink water shower and, flush their toilets, even when the economy's not doing so great.
Exactly. It's a basic necessity.
Okay, so let's take a step back and look at the big picture here. We've got these three companies, all with decent dividend yields, but each with their own unique pros and cons.
It's a pretty diverse mix.
Kraft Heinz, with those iconic brands and that high dividend, but they're struggling to grow. Kenvue, with the potential for a big turnaround, but also facing a lot of uncertainty.
Right.
And then Middlesex Water with that rock-solid stability and consistent dividends, but maybe lacking some of that exciting growth potential.
So many different factors to consider.
It is. So if you could only choose one of these stocks for your own portfolio, which would it be?
Ooh, that's the ultimate question, isn't it?
It really is.
Yeah.
It all boils down to your personal investment goals and how much risk you're willing to take.
Exactly. Are you more comfortable with a bit of risk, or do you prefer to play it safe?
Right. So if you're feeling adventurous and believe that Kraft Heinz can stage a comeback, they might be a good fit.
But if you're more risk-averse and prefer those sleep-well-at-night investments, Middlesex Water might be the better choice.
And what about Kenvue? They're kind of the middle ground, aren't they?
Kenvue is interesting because they have the potential for higher growth if they can figure out that skin health segment.
Yeah, they need to turn that around.
But they also carry more uncertainty compared to the other two.
So they're a bit of a wild card.
You could say that they could be a great addition to a balanced portfolio, but it depends on your risk tolerance.
Okay, so no easy answers here.
Nope. Investing is all about weighing those trade-offs.
Right. It's about finding the investments that align best with your own individual style and goals.
Exactly. What works for one person might not work for another.
And it's not just about the numbers and the ratios.
Right. It's about understanding the companies, their strengths, their weaknesses, their potential.
It's like putting together a puzzle.
I like that analogy. You've got to gather all the pieces and see how they fit together.
And sometimes the pieces don't fit perfectly.
That's true, but that's where your judgment and your risk tolerance come into play.
Exactly. So we've talked a lot about these three companies and the different factors to consider when making an investment decision.
We've looked at their financials, their growth prospects, their dividend yields, their stability.
We've even heard from our listeners about their own preferences.
It's been a great discussion.
It has. So now that we've laid all that out, it's time for our listeners to weigh in.
I'm ready to hear their thoughts.
We asked you to choose just one of these stocks, Kraft Heinz Kenvue or Middlesex Water, and tell us why.
This is where it gets really interesting.
It is. I want to know which company resonated with them the most.
What factors were the most important in their decision?
Okay, so before we dive into those responses, let's just take a moment to reflect on what we've learned about these companies and about investing in general.
Good idea. It's important to take a step back and think about the big picture.
We've explored the world of undervalued stocks. We've talked about the importance of understanding a company's fundamentals.
Not just chasing those dividend yields.
Right. We've seen how a company's past performance can give us some clues about their future.
But it's not always a guarantee.
It's like piecing together a puzzle.
There you go with that analogy again. I like it.
You gather all the information, you analyze the pieces, and then you try to see the bigger picture.
And sometimes the picture isn't totally clear.
Right. That's where your own judgment and risk tolerance come in.
Absolutely. Investing isn't an exact science.
It's about doing your research,
understanding the companies,
and making decisions that align with your own goals and comfort level.
Well said. So are you ready to hear what our listeners had to say?
Bring on the responses. I'm excited to find out which company captured their attention. Wow, you all really put on your thinking caps for this one.
It seems like it.
We got so many responses.
Yeah, we did.
And it looks like we have a pretty good mix of opinions on which stock has the most potential.
A lot of different perspectives.
What were your takeaways from reading through those?
Well, one thing that really struck me was how people prioritize different factors when it comes to investing. Some listeners were really drawn to that high dividend yield from Kraft Heinz.
Yeah, even with all the risks.
Right. They're willing to take on more risk for that potential reward.
Makes sense.
Then you had other listeners who were much more cautious.
The play it safe types.
Exactly. They like the stability of Middlesex Water.
Slow and steady.
And then there were those who were really intrigued by Kenvue.
The underdog story.
Yeah, they see the potential for a comeback and they're willing to bet on it.
It's like everyone has their own investing personality.
I think that's a great way to put it.
Some people are more comfortable with risk, while others prefer to play it safe.
And that's why there's no one-size-fits-all answer when it comes to investing.
Right. The most important thing is finding investments that align with your own goals and risk tolerance.
Exactly. There's no right or wrong answer.
You know, reading through all those responses really reminded me of something important.
Oh, yeah. What's that?
Sometimes the best investment decisions aren't just about the numbers.
Okay.
They're about the story behind the company.
That's a great point. Understanding the company's history, its management team, its overall strategy.
It all gives you a better sense of whether you believe in them.
It paints a fuller picture.
Exactly.
Yeah.
For example, we had a bunch of listeners who chose Kraft Heinz because of that emotional connection to the brand.
Nostalgia.
Yeah, they grew up with those products, and they believe in Kraft Heinz's ability to evolve and stay relevant.
Interesting. So that personal experiences influence their investment decisions.
It seems like it. And with Middlesex Water, a lot of listeners were drawn to their long history of stability.
Makes sense. They're a very dependable company.
Right. And that commitment to those dividend payments,
it's like clockwork.
They see it as a reliable, low-risk investment.
Something you can count on.
And for those who chose Kenvue, it was all about that growth potential.
They're not afraid of a little risk.
They see those current challenges as temporary, and they believe that Kenvue has what it takes to turn things around.
It's a more optimistic outlook.
Yeah. They're betting on innovation and adaptation.
Interesting. So we've got risk takers, stability seekers, and those who are looking for a bit of both.
The whole spectrum.
It's amazing how one deep dive can spark so many different perspectives.
It really is. It just goes to show that there's so many ways to approach investing.
There's no one right way.
And there's so many different opportunities out there.
If you're willing to do your research and take calculated risks...
Okay, I think we've covered a lot of ground today.
Yeah, we have.
We've looked at the financials, the company narratives, we've even heard from our listeners.
It's been a really comprehensive discussion.
I always say the best investments are the ones you understand and believe in.
I agree.
Whether it's a brand you've known your whole life, like Kraft Heinz,
Or a steady utility company like Middlesex Water.
or even a potential turnaround story like Kenvue.
It's about finding those companies that resonate with you and fit into your overall investment strategy.
Well said.
Yeah.
Well, on that note, I think it's time to wrap up our deep dive.
It's flown by.
It really has. Thanks for joining us today, everyone.
Yeah, thanks for listening.
We hope you've learned something new, gained a fresh perspective.
And maybe even discovered a potential investment opportunity or two.
Remember, investing is a journey, not a destination.
It's about learning, adapting, and making informed decisions.
So stay curious, do your research, and most importantly, invest wisely.
Until next time.
Happy investing, everyone.